Bitcoin just erased its year's gains, and everyone is asking now, is the bull market over? Which is the wrong question. The right one is, how low can Bitcoin go? And it would be great if we could answer that question with some data and not hopium and not doom, which is basically all I've seen on my Twitter timeline for the last week now, along with all the VC bros shilling me Zcash. Drop a comment if you want to talk about that in a couple weeks, because that doesn't make any sense to me. Anyway, over the last month, we've seen ETF outflows, forced liquidations, breaks of big moving averages, and a full flip in sentiment. My hunch is that someone large blew up back on October 10th, and I can't prove it, but that's kind of what it seems like. Regardless of what's happening, people are freaking out. So here's what we're gonna do. I'm gonna walk you through an advanced risk model that compresses a ton of different signals in the market down to a single number that scales from 0, which is we're totally screwed, all the way up to 100, which is maximum euphoria. Then we'll translate all of the different numbers between 0 and 100 into an actual range of prices, both to the downside and to the upside, so that you can size your positions like an actual adult. If you guys are new to the channel here and you haven't seen the product before, it's called Alphasquared, and it's what has allowed us here on the channel to massively outperform a dumb dollar cost averaging strategy where we're just buying the same amount of Bitcoin every day. And if you want to see full tutorials of anything like that, I'll have those up in the cards and down in the description. I'm not going to tease you with it anymore, so let's just jump into the demo. So go down below and smash the like button, and let's level up your brains. So once you go ahead here and log into Alphasquared for the first time, you're gonna see your favorite risk models. And ever since I showed Alphasquared here on the channel before, there's actually a lot more content in Alphasquared. So there's not just Bitcoin, but there's also Ethereum, Solana, and a bunch of other cryptocurrencies. There's also the S&P 500, which is really exciting, and it's really cool that Alphasquared is moving into some of these TradFi assets. But for now, let's go ahead and just take a look at Bitcoin. The first thing that's gonna pop out to you is this big current BTC risk number. So you can see that as of today, the BTC current risk is about 25, which you'll see is towards the low end of the 7-day risk range and super towards the low end of the 30-day risk range, which is between 23 here and all the way up to 50. And then over here, you'll see the risk price matrix. And this is one of my favorite pieces of Alphasquared data. Whenever the price is dumping or whenever the price is climbing, I'm opening Alphasquared and I'm checking this number and I'm checking all the other numbers that are on the table. So you can see here, if we got to a risk level of 0, Alphasquared is saying that the price would be somewhere around 40,000. And if we were all the way up at 98, the price would be somewhere around 273,000, which would be crazy. And a lot of people, when they first see this, they're like, all right, that's great, but like, how often has 0 happened and how often has 100 happened? What's really cool here to solve that problem is this historical risk monitor. And what you're seeing here is a log chart of Bitcoin, and that price is in black here. And then the orange chart, that heat map at the bottom, is what the Alphasquared risk number was at these different price points. So if we scroll back to like November of 2022, when FTX happened, the risk was about 5. So just think of FTX blow up, the risk of that is 5. So do you feel like we're at FTX blow up levels of risk right now? If we do get some sort of big FTX blow up of risk, we could go all the way down to 5, which if we scroll back up to our little chart, 5 corresponds to about 50,000, which dropping all the way down to 50,000 would kind of suck, but it would also give us one last ride as part of the 58K gang. And if you're part of the 58K gang, definitely leave a comment down in the comments and follow me over on Twitter. But if we keep scrolling back here through the historical risk monitor, we'll see that around the time that Luna blew up, we're actually down at a risk of 2. So if we were down at a risk of 2, we would actually be closer to the price of like 40,000-ish, like low 40,000s it looks like. And then if we go back to COVID, we're seeing that there were like, you know, risk levels similar to that, risk level of 4. I'm not sure what happened back here at the end of December, but we were down to really risk level of 2, price of 3,000. Definitely a good time to buy. And that's kind of the bottom line, is that when these numbers are really low, it's a great time to buy. And when these numbers are really high, it's a great time to sell out of your position or stop buying maybe, or buy a little bit less. The bottom line is that now we can use this one risk indicator from a 0 to 100 basis to get a better idea of what we're in for. If it really hits the fan here and we get another FTX style situation, we should be prepared to see prices like this up here at risk level of 0. But if we go back to like what things were doing about a month ago, we should be back to risk prices of like 45 or 50, which is corresponding to, you know, like 110,000, which kind of business as usual. And I'm filming this on the weekend, but over this next week, if we get a rebound, we should be prepared to rebound to something like that. And then obviously the same thing when the risk number is really high. You could see up here the risk number was 98, and that was kind of like a local maximum for Bitcoin back in 2022. And so if we got to one of those local maximums again of 98, we should expect the price to be something like $273,000. So again, this chart is very valuable just to show you, like, put numbers to, all right, what is the absolute worst thing that we think could happen, and what is the absolute best thing that we think could happen? Obviously, none of this is financial advice, but it is really helpful to take this data and then look at these back-tested metrics that Alphasquared never changes. Alphasquared's been running the same algorithms this entire time. You can even go back to the earlier Alphasquared videos that I've done on this channel that I'll leave up in the cards and down in the description. And you can compare the risk numbers back in that video to the risk numbers that you're seeing on the screen here. And you'll see that the algorithm has been consistent this entire time. And at this point, they have been around for quite a few years, and I've been using the algorithm. The other people on this channel that have been dollar cost averaging have been using the algorithm, and we've been getting some pretty good returns. But Rhett, how good have the returns been? I'm glad you asked. Alphasquared actually has a really cool tool over on the left that you can click into called strategies. So if you go in and click on my strategies, you can create some new strategies. So we'll go up here and we'll click on new strategy, and we'll just go ahead and start from a template, but just know that you can go as deep and as custom as you want. But for beginners, start with a template is the best way to get an idea of what's happening here. So let's go ahead and choose our asset. We'll choose Bitcoin, of course. For our dollar cost average target amount, let's say that we're going to dollar cost average $100 a week. And then we can set our time frame. Let's say that we're going to dollar cost average once a week. And then here, just as a very basic model, we can click conservative, moderate, or aggressive. And you can kind of see here what's happening. So up at the top, when risk is 0, we're buying $160, which is more than the $100 that we wanted to be buying every week. When risk is 10, we're buying $140, or between 10 and 20, we're buying $140. Between 20 and 30, we're buying 120, and so on and so forth. And then down here, when it's above 80, between 80 and 90, we're selling 30%. And then between 90 and 100, we're selling 70%. And then what's really, really valuable that Alphasquared does here is it has this really robust backtesting calculator. So I like to backtest from only a couple years ago, but you could go ahead and backtest all the way back to like 2013 or 2020 here if you wanted to. The thing that kind of worries me about backtesting too far back is anyone can create a backtested model that performed really well in 2013 and outperformed all the way up to today. But it's harder to create a model, release it into the world, not change the model at all, and then still have the model outperform. So in my opinion, when I see really good backtesting over the last year or two, or even 3 or 4 years that Alphasquared has been around and has been publicly doing this, when I see those kind of results, those really speak to me because that's real results that we got here on the channel. Not like some cherry-picked back-tested data from 2013 where like it looks like we did really well, which it's going to look like we did really well back in 2013 because obviously if you bought Bitcoin in 2013, you did nothing else, you would have made tons of money. But I actually think it's way more impressive to be able to have done well over the last couple of years. So let's go ahead and move this calendar forward to like the middle of 2022 maybe. Let's pick May of 22. And then let's go ahead and calculate, and then we actually have an end date that's too late here. So let's go ahead and just push that to today. So we'll go ahead and click on calculate here and just see how much better this aggressive strategy would have done for us than a regular dumb dollar cost averaging strategy. So it took a second there, but it did its back testing. And now if we scroll down here, we can see that the aggressive strategy over the last couple of years here would have invested a little bit more money than our regular DCA, but we would have ended up with a lot more profit than our regular DCA. So 30% extra profit compared to the regular dollar cost averaging. And you can see here, if we zoom in on the chart, all these little green bumps are buys and the red bumps are sells. The red down arrows are sells. I'm not really seeing any sells. If we click off here, yeah, it looks like the aggressive strategy didn't sell at all. So let's go ahead and change to a different strategy. Maybe we can do the conservative strategy and then simply recalculate our backtesting. So the backtesting worked here. You can see that it was aggressively buying Bitcoin between like $30,000 and $17,000. And then again, down here around, $25,000 back when risk was like 17 or 18 back in 2023. And then it didn't do anything. And it sold some Bitcoin up at like 70K back in 2024. And now it hasn't done anything again. Maybe if it goes a little bit lower, it'll start to buy again. But we'll see here, it invested less and it massively outperformed on the profit side. And so then if we go ahead and split the difference with like a moderate strategy, I think this is where most people are going to want to be, depending on what your use case is. You might want to be conservative and you might not want to invest that much. And you might only want to buy really, really low dips and sell when you're in a decent amount of profit. The really good thing about Alphasquared is that it's fitting lots of different investor use cases. So here's the moderate strategy. You can see it was buying a little bit more than the conservative strategy, and it sells a little bit more too. It's selling again up at 100,000, where the conservative strategy maybe it ran out of Bitcoin to sell at that point. You'll see this one, even it got closer to like the actual number of investment dollars to the regular DCA. You end up with more Bitcoin than you do before, and obviously lots more profit and a better risk to reward profile here as well. So then once you're done, you can come down here and click on save strategy, and you can get email and web notifications once you name your strategy. So standard strat, and then I'm going to get email and web notifications whenever this strategy is triggered. So that's a very basic flow for anyone that's interested in just getting started. But for anyone that is like a power user, you can obviously come up here to new strategy and fine tune your own custom strategy, where you can buy, any amount or any, sell any percentage based on any of these different ranges. And then obviously come down here and backtest your strategy to your heart's content. It is really customizable for anyone that wants to do any sort of trading around any crypto that's available here on Alphasquared, or even now the S&P 500, which again is super cool. So if you guys want to get started with Alphasquared, now is actually the best time to do it, because they have a Black Friday special for everyone that's watching this video. If you use code RET30 that I'll have here on the screen, when you check out with a paid plan, you're going to get 30% off during this next week of Black Friday. I'll have the terms in the description and a link down in the description so that you can get started with Alphasquared. So how low can Bitcoin go according to the science? It seems like if we get an FTX style blow up, we're gonna be down in the 40s and the 58K gang is gonna ride again. But obviously on the other side, there's plenty of upside as well. And that's what I really love about Alphasquared, is it helps me understand, all right, based on prior markets, like what are we looking at here? And the data is constantly updating all the time. So you'll see these bands change day after day. If you log into Alphasquared a week from now, your numbers are not gonna be the same as the numbers that I just showed you here today. And then what's great is because of the backtesting and because of the flexibility of the platform, you don't have to guess what strategy is going to be the best for you to execute. You can actually build one, backtest it, and then use that strategy going forward. In some videos that I'm going to post next year, I'm going to have multiple Alphasquared trading strategies battling against each other in different Coinbase portfolios against stuff like the Fear and Greed Index, and then just a plain old regular dollar cost averaging strategy. Same rules, same starting capital, and then we'll see over a year and over 2 years which strategies are the best. Just having used Alphasquared though over the last 2 years, I'm pretty confident that Alphasquared is going to win. But it'll be cool to see of the different Alphasquared strategies, which ones perform better in real time. If you got any questions about Alphasquared or how to integrate this into your own Bitcoin trading bots, definitely join the Discord, link down in the description. There's a lot of other traders and programmers in that Discord, and we can probably help you out. That's it for today. I love you all. We're in an interesting market. Times are good, times are bad. See you next week. See you soon. I haven't been very consistent. See you soon.